The best things in life are free, but you can give them to the birds and bees. I need Hello and welcome to Meet Your Money, the show where we discuss topics that most or all of us will encounter in our lives from a financial perspective. And tonight we are going to be talking about real estate and loans, and we have our guests here. We have Andy Madrid, a realtor in the area, and Dan Skidmore, who has two jobs, very important. So as well as being a loan officer, he is also the Director of Business Development at the Goleta Chamber. That's correct?
It is.
Okay, cool. Before we start, obviously Santa Barbara is a fairly somber area at the moment. Our show will be a little different. There aren't any interns here today because they're having a memorial service, and we here would like to express our condolences to those affected and wish a speedy recovery for all those there. Okay, that's out of the way. Ooh. Okay, right, so let's start with the show. Buying a house, it's your biggest purchase probably in your life, biggest investment you'll make.
Usually it is.
Is it an investment or is it just a home to live in? Or is it both? Gentlemen, who wants to take that one first?
Andy, you got this one?
Yeah, I think it's both. I think that, it depends on your mindset. I mean, are you buying it as an investor? Are you treating the home simply as a product? Or are you going to become emotionally attached to it, like most typical home buyers are? They're buying the house to live in, You can't always be thinking about what's going to happen down the road. You're living in it for today.
Well, you make that decision, are you going to rent or are you going to buy, right?
Right.
And sometimes the decision's forced upon you from a financial perspective.
Right.
But you make that decision, and then I guess as part of that decision you should decide, I'm keeping this house for minimally X number of years, hopefully, and then is it a home or is it an investment from there on in?
Right. I think when you're buying it, it's going to be a home. But when you get to that point where you might sell it, then you probably need to start thinking like an investor, because as long as you stay emotionally attached to it, it can become complicated when you're going to sell it.
Yes, for anybody who's bought a home and gone to the house and seen the seller, they're not quite in tears, but certainly they're emotionally attached to it. And that's a question. When you're selling a house, should you diamond line the wall? Should you paint everything up, make it look as good as it is, or you're just selling it as it is? Should you go about doing that?
Sometimes it's not just black and white like that. I think that depending on your market, you're going to have maybe suggestions from, of course, family and friends and your real estate agent to give you advice on what you should do. Sometimes you have to do things like paint and recarpet.
Right.
Depending on the market, you might need to sort of go all out and get it all done. But sometimes it could be a situation where you just need to sell the property for financial reasons, or maybe there was a change in the family dynamic that forced you to sell it, and in which case you'd put the property in the market and sell it for what you can get for the way it is now.
Right. So I guess if it's a fixer-upper, there's not much point in repainting it because it's still going to be a fixer-upper no matter what.
Exactly.
Right. Okay. Now, in order to buy a house, we need a loan. And things have changed since the heady days of the early 2000s. Can you tell us what's changed there, Dan? What's the rules about buying? What percentage do you have to put down nowadays?
Well, the rules overall have changed in the mortgage industry, and the CFPB has been trying to help us as far as getting the regulations in order. Some major changes we've seen is really tracking the money source. It's been one of the biggest complaint I've heard of. We'll see what that means if you have a source of down payment. What they want to do is think of Jerry Maguire and say, show me the money.
Yes.
That's the underwriter screaming to us, show me the money.
Okay.
So make sure you keep track of your finances well ahead of time. If there's large deposits coming in that are not work-related, like say Uncle Larry being a poker, write you a check for $5,000 and you deposit that, the lender's going to say, okay, where does this money come from? Let's see it. What happened? So that's been one of the biggest sort of, I guess, tidbits as far as an actual someone buying looking to deal with. As far as down payment goes, minimum is 5% on a conventional loan. FHA loans are still at 3.5%. So
That's still Pretty good. So it's still getting a 95% loan on your house.
Absolutely.
Can you just tell us one thing? What does CFPB mean?
That's a that's the Consumer Federal Protection Bureau.
Okay.
So it's one of the oversights and regulators that we look at.
And that's federal, not California?
Federal.
Okay. All right. So now part of my job as an advisor sometimes is to help people lower their adjusted gross income, you know, by having a retirement plan, which will, by definition, using pre-tax money, lower your adjusted gross income. Now that's good for you when you want to retire, but is that going to be detrimental to you when you're applying for a loan, having a lower income?
No, as far as if you're going to put money into your account, we'll look at the gross money if you're from your W-2. So
Yeah.
if you're a salaried employee, we just look at your W-2. If you put money in your IRA account, something like that, to tax defer something, that nothing to do with you being qualified for a loan. If you're self-employed, however, there are little sort of caveats that look at from an underwriter point of view, meaning that they do a 2-year average of your income. And one of the things they'll add back in there is, say you drive your truck, for example, and I pay my truck bill through my business checking account.
Yes.
Make sense?
Yes.
If I can verify that for 12 months, that cost of that truck is not included in my qualifying ability.
Okay, so then the big question is, if I'm thinking of buying a house, are there steps I should take rather than run into the first open house going, oh boy, I want this one?
Absolutely.
Okay.
Particularly now, as Dan mentioned, with the new mortgage regulations, it's really important, and particularly in our market, is to meet with a lender. I think it's always good to know where you stand before you put pen to paper and write an offer. You know, so, but oftentimes the people are coming in, they go into the first open house, or they drive by a new development,
Yeah.
and they see all this new construction, and they just want to look. And what happens is now they end up, you know, making an offer on something before they know what can they afford. They haven't talked to a lender, and to find out, you know, how much mortgage can they really take on, and what can they qualify for. You know, it's really important both to identify and work with a really good, reputable local lender and a really good, reputable real estate professional.
So you used the word local there. So there is is there an advantage to working somebody with local, or is it an advantage to know the market?
Well, I think that's something that both Dan and I can speak to. From on the real estate side of it, you know, if I'm representing a buyer or a seller, knowing that the other party is using a lender that's local and not coming from out of state where they're more difficult to get a hold of, or they're not using someone that they saw an advertisement on TV because they got some lowball interest rate.
Yeah.
You know, I think it speaks to the stability of the transaction, knowing that you're using a lender right there in town. And I always talk to, you know, if I'm representing the buyer, I always make sure that they've at least spoken with a local lender, whether or not they choose to use one.
Okay, I think I forgot to mention at the beginning that this is a call-in show, only in the date stated, May the 27th, and the numbers on the screen there. But using a local realtor, I mean, throughout California is pretty much a shortage of inventory. Would that be correct?
Correct. You know, using a local realtor, that's kind of a given. Although I have helped clients buy and sell property with using a real estate agent that's out of the area. But one of the things that, you know, us as part of the Santa Barbara Association of Realtors, we subscribe to the multiple listing service. So we have access to the inventory of homes that are available. And not just that, but we're also in communication with other agents and perhaps neighbors or sellers that might be interested in selling their home and it's not listed for sale. An out-of-area agent wouldn't have any access to any of that.
Okay, but I mean, from myself, who actually knows how to use a computer, I mean, I've jumped onto like Zillow and Trulia and all these sites, and you know, just the real estate sites in general, and checked out. But you know, you go by price generally, and you've no idea what if you don't live locally, you've probably no idea what the area is like when you're looking at it.
94% of home buyers start their real estate search online.
Okay.
And internet's a great place for finding out about the community, finding about out about jobs and about recreation and the demographics and the neighborhoods. But when it really comes down to brass tacks, you really do want to talk to a real estate agent, because those sites like Realtor.com or Zillow or
Yeah.
Trulia, there's some good data in there, but they're getting their information based on algorithms that are calculated on recent home sales and other information. So there is a margin of error for that information.
I've got to say I personally encountered that because I live on the beach, right? So they always like go within a mile or something like that to get the average house price. But the price of a house on the beach or on Ocean Drive or either side is different from those on the side streets. That just the way
Right.
it is.
So for instance, if you have a house for sale on the beach and there haven't been a lot of sales, one particular real estate site might calculate what your home's worth based on sales for homes in the area, but there haven't been a lot of sales. The estimate will be really way off,
Yeah.
either really high or really low.
Yeah.
Because if it just uses one recent sale and there aren't enough in that neighborhood, then the numbers aren't going to be accurate. But I think it's a great place for people to start, and like I said, almost everybody does.
So from your perspective, Dan, so like when somebody's buying a house, and then how do you see it as, from the conversation we just had there, when somebody's looking to get a house, and it's got to be appraised correctly and to get the loan. So how do you fight that one when there's an issue?
There's an issue, depends on what it is from the appraisal's point of view. Most commonly, we'll see issues with repair work. Little tidbit things, anything that's health and safety based is going to be a big no-no. We got to get this fixed before escrow closes. And that makes life of realtors, a little harder in general, because the next question is, who's going to pay for it, the sellers or the buyers?
Right.
Sellers aren't going to own the property, the buyers don't own it yet. So those are some of the tidbits we run into. As far as value goes, on the appraisals now, really we have allowed no contact with the appraisers anymore on value issues from a lending point of view.
Okay.
Realtors can provide information to the appraiser, but typically they will not move. I've yet to see a recent value move at all.
Really?
Big issues we've seen overall repair work, and if it's a health and safety issue, a big no-no. If it's something more aesthetic, like you took a tarp out, had it out for the dog, for example.
Yeah.
People might think, it's a roofing issue. No. So things like that can easily be fixed. But health and safety issues are the big showstopper.
Okay. So then what we're talking earlier, do you buy a house for investment or do you buy it, to live in? Mm-hmm. So what kind of loan should you go for depending on what your outlook is for the house, whether you're buying it short term or long term or?
Well, it depends on your overall plan. People say, I'm going to live in the house for 2 years, I'm going to sell it. Okay, great, that's wonderful. You have the plan, you're going to have this house for so long, or say you're here in town 5 years.
Right.
Now, people like the fixed rate mortgage, and people sleep better at night, and it's fantastic, but it depends on your plan for the property.
Right.
If you're only going to be here 5 years, maybe get a 5-year loan. You'll pay a lot less interest, maybe say 2% or around there, less interest over that 5-year period, if you know that's going to be your bag. So
now you're talking about a 5-year loan, so the term is 5 years? You're not talking, or are you talking about adjustable that changes after 5 years?
An adjustable changes it for 5 years.
Okay.
So the fixed rate mortgage is going to be it's nice because it's the same rate, same payment every month for the next 30 years. Not going to change. A 5-year adjustable, for example, they call them 5-1s.
Yeah. What
the 5 represents is the initial rate I tell you. That's going to be the rate you're going to get for 5 years.
Right.
When I say the 1 part, that means it's going to adjust once a year after the first 5 years.
Okay.
So there's additional programs out there like a 5-5, meaning the original rate I give you 5 years. After that, it'll adjust every 5 years. So that's those mean.
So if you're thinking on a short term, a variable may be a better way to go.
Yeah.
Initially, that's if you think.
It depends on your plan.
Right.
If you want to keep that home and turn to investment, maybe you want to keep a fixed rate. So it depends on your plan.
Okay. And then location, that still applies when you're buying a house?
Pretty much that's still the common denominator.
Okay.
Location.
Okay.
And in Santa Barbara, it can be a particular school district. It can be a particular neighborhood. In real estate, there's a rule called the principle of progression, which means if you buy the cheapest home in the best neighborhood,
Right.
that home's value will increase at a more rapid pace than the other homes, because it'll elevate that home's value to the better homes in the neighborhood.
Right.
But you still need to take into consideration what's important to you: the proximity to schools, the proximity to transportation. How do you live your life? The things that you need in your neighborhood. So it might be location, but a lot of times there's a bunch of mitigating factors.
So if you're buying for resale, you know you're going to be there. Maybe we talked about the 5-year deal that you're here for 5 years, and then you're someplace else, or maybe someplace else. Should you buy a 3-bed, 2-bath? What kind of house is the best to buy in those circumstances, or just generally?
I think it's again goes back to what's the demographic of the neighborhood. If you're buying a 2-bedroom home in a neighborhood that's very family oriented, has lots of large families in it,
Yeah.
that would be a more difficult sell.
Right.
When you're selecting your home, I have a friend of mine, when they bought their house, his number one criteria was he had to live within 1 block of a home that would sell for $1 million. Now, this was several years ago,
Okay.
and it wasn't in Santa Barbara.
Okay.
It was in Camarillo.
Okay.
And at the time, there weren't that many homes that were going to sell in that price point, because this was in 95, 97.
There wasn't a lot of homes.
And
for
there
$1
weren't a
million.
lot of homes, but
No.
that was the number one criteria, and that was
Okay.
that was pretty much what they based their selection criteria on. And they're in a house they've done very well. They bought the cheapest home in the best neighborhood.
And that worked well. So should you buy a fixer-upper, or should you buy one that's already done to the nines? Or is that your choice?
If it comes down to location, and all you can afford is a fixer-upper,
Yeah.
and it depends on different factors like, are you going to get a loan for it?
Right.
Will it finance?
Right.
Does it need too many repairs? So if it does, then you got to figure out how you're going to pay for that property.
So that goes back to you, Dan.
Mm-hmm.
So if something is sold as a fixer-upper, or as the land, goes back to the point you were making before, I guess, is it easier? Can you still get a loan on it?
Yes, you can.
Depending if there's no health and safety issues.
You can, Richard, yes. The question comes in to be, well, as you said, the type of property you're looking for, and say it's a fixer-upper, and a lot of repairs can be done. What you're limiting yourself on is really the products available to you. The standard sort of fix item that to get you in the house, say you're a first-time home buyer,
Yeah.
is an FHA loan called a 203K. Basically, it means there for repair work. Say I need a new garage door. There's a very large amount of money that can be put into the repair work, and it'll be financed by the lender.
Right.
Okay. Now, what you have to do is more paperwork involved. You have to get a contractor, bids, kinds of things before you close, but they can be financed.
Okay.
If you don't want to go through an FHA route, there are some construction loans typically that can be done. Those are called rehab loans. But the problem with that is only a few lenders do them in town. So it's always best to ask some of the banks in town if they have a rehab or construction lending program. But most of the lenders, FHA 203K loans, a lot of lenders will do those. But once again, it depends on, you got to find out the amount of repairs. Just a rough guesstimate is fine, because that will also limit what lenders can help you.
Okay. And then in terms of remodeling your home, everybody says kitchen and bathrooms, is that the case? Or
It's still kitchens and bathrooms. And as you look at different cities around the country, each one of those will have the 1 or 2 items that are going to be the thing to renovate that is attractive to buyers. But primarily it's kitchens and baths. But the number one item that gives you the biggest bang for your buck
yes.
is your front door.
Really?
If you walk up to a house that's got a dingy front door that's all scratched and needs to be repainted, what's your first impression is the most
Yeah.
important.
Yeah.
So if I'm the seller and I replace my front door, or I repaint it and put new hardware on it, that's a pretty cheap improvement, and it gives you the biggest bang for the buck.
Huh.
But overall, on significant renovations, kitchens and baths.
Okay. And so how much? So if you've got a house that needs refurbished and you're going to sell, is there a percentage you should put into it? I mean, if you put in 10,000, you get out 15, or is there a rule of thumb as far as that goes?
I don't think there's any calculated rule of thumb, but
Okay.
a potential home buyer might walk into the house. They won't notice that you had the house replumbed, or they might not notice that you had the house re-roofed. But if they open up a cabinet door in the kitchen and it squeaks or it's loose, and you might have a doorknob missing in a hallway,
Yeah.
these are really minor, really cheap fixes.
Yes.
But those are the things that will stand out in the buyer's mind. Sure, the real estate agent would advertise a brand new roof, a brand new furnace, new air conditioning unit. But it's the buyer coming through the door that notices the small little things, because a buyer will open and close everything. They're not going to try the dishwasher out walking through the house on open house.
Right.
That'll happen during an inspection. So knowing it has a new dishwasher, it'll have a nice pretty face on it, but it's going to be all the other things.
I've got to say that when I had my house for sale and the realtor came through, they pointed out things that I didn't even notice because I lived in the house so long. I didn't even notice they were there.
Right.
They go, you need to get rid of that, or you need to fix this. And going, oh, didn't even notice it, because you live with it every day. So how much help can a realtor give in helping a seller sell their house?
One of the things I think that a seller could do would be to have a home inspection before they put the house on the market. The inspector will come through and they'll look at everything. They get in the crawl space, they get in the attic.
Yeah.
They get on the roof, they test all the electrical. They open all the cupboard doors and try all the appliances, particularly if you're going to sell those items as part of the house.
Yeah.
And they'll be able to point out all the things that the homeowner might miss because they've been there for a long time. And they don't really realize that the hose bib outside is leaking, or the kitchen faucet, is, kind of leaking, or there's a stuck valve in a toilet. Those kinds of things the homeowner might not know about, but they can all get pointed out and they can all get taken care of.
So they'll take the emotion out of the sale because it's all factual. The inspector.
Right, you have an independent third-party person coming through. And for me, I always have a couple of recommendations of inspectors so they don't feel like they're getting slighted. And same thing with lenders.
Okay, so is a house sale always emotional?
Oh, it's always emotional.
Okay.
Whether it's going to be for the buyer to buy it, or the seller, or the family of a deceased homeowner, there's always emotion in it.
Okay, so how do, I think you touched on this a little earlier, but how do we find a good realtor? How do we find a good lender? How do we know that, what questions should we ask to ensure?
Well, if a potential buyer comes to me and is looking, first of all, the California Association of Realtors has ethical guidelines that we as realtors have to adhere to. And one of those is if somebody comes into my open house and they have an agent, I really can't go and take that away from them.
Right.
But they might ask for a lender recommendation. I'll always have lender business cards, and that's based on my own experience. And if I have a good experience with a lender, I'm going to have their business cards. If I have a bad experience, I won't have those cards.
Now, the first thing you said earlier was that they should speak to a lender first. So when you go to a lender, Dan, what should somebody be looking for in a lender?
It'd be a variety.
Somebody like you, but other than that.
Be a variety of things, but
Yeah.
mainly you want to see what the response time is going to be, what the response time is, and their knowledgeability about what they're looking for.
Okay.
There's a phone call.
Oh, we have a phone call. Okay. All right, we have a phone call from John Hurd. John, good evening. Hello, John.
Hello?
Hello, you have a question for the panel?
Yes, I do. I actually, my name isn't John, it's Keith, but it probably came through as John. I have a home in Santa Barbara. It's on the Mesa. It's quite an older home, and it needs a lot of renovation. If I were thinking to put it up on the market, this question would be for the realtor there. If I did do a kitchen renovation, how would I know if what I did would be the right thing, or if I overspent to sell the house? Or can you give me a little bit of information on how I might look at that?
One second, Keith. Have you spoken with a realtor yet?
No, I actually have not. A little bit scared about realtors because I've had good experiences and bad, and I like what I'm seeing here today, but just don't even know where to proceed from here.
Okay, so we've only got a couple minutes left in the program, so I'll put you on hold and then we'll have Andy answer your question. Thank you so much, Keith, for calling.
Hi, Keith. I think that, if it were me, what I would do is take you to a couple of other properties. First, I'd want to preview your house and see how it's laid out. And then right off the cuff, I'd probably have some suggestions. But I would take you to other houses in the neighborhood that have done some renovations so you can see what they've done and have a comparison, as well as it gives you a better idea of what a potential buyer would be expecting in a kitchen renovation. I can tell you that on the Mesa, they are expecting a fairly high-end renovation. So the typical granite counters, stainless steel appliances, middle to higher end. They like the open concept, and then partner you up with some contractors that could give you some bids for the work. And I think that would be the best way to approach it, and then go from there.
So Keith brought up a good point. So the advice you're giving him is, look at the other homes in the neighborhood. If there's anything for sale, compare them to yours, and then check out to see. Then you need a realtor to price.
Right, and a lot of that stuff, I might sit down with Keith and go over homes that have recently sold.
Right.
Look at the photographs, because a lot of times the kitchens will be there.
Right.
And just show him what they've done.
So he can do a little bit of work by himself by checking out the other homes in the neighborhood, or going onto the web and seeing what's in his neighborhood, checking what they look like, even just by the pictures alone, and then see where he is. And then in terms of buyers, so are there buyers out there that want to renovate? They'd rather buy cheap and do it so they get the house they want, or buyers looking for the turnkey solution?
I think buyers.
Sorry.
I think buyers like the idea of the renovation.
Yeah.
And getting in on a lower price point. The reality is buyers are very busy. They have lives. They've got kids and school and work and all different kinds of schedules that preclude them from being able to do that work.
And then from your perspective, Dan, so if he's selling a house which is perhaps, by his own admission, not in the best condition, that could be an issue in terms of getting a loan for it. How much the lender prepared to lend on it?
Possibly, Richard. It's really, as long as it's livable, really. I mean, the appraiser is not going to be a home inspector, as Andy's going to have here, but as long as it has minimum, basically, standards as far as living it. It's health and safety issues, though, with gas lines that expose, things like that. Those are bigger issues, but most likely it's going to be okay, as long as it's livable, though.
Okay, gentlemen, thank you so much for coming tonight.
Thank you.
And we appreciate and I think there's some good information for Keith there and for other people. I'd like to thank you all for watching, and thanks to our production crew. Unfortunately, there's no intern tonight. It's just Jared and there, Mark as well, working hard on it. Thank you. See you next month.